what are the different types of mutual fund schemes?
Yeah, excellent question. I thought I would cover, but thanks to you, you have asked the right question. So mutual funds are primarily divided into two parts. Uh, the the open-ended mutual fund or the close-ended mutual fund. So open-ended mutual funds are basically like open schemes. They start at the NAV of 10 rupees and they continue. Some of the mutual funds have NAVs of 200, 300, 400 because they are continuing for the last 2 or 20 years. So as an investor, it's like a long bus route. You can come into any stoppage, you can come out of the bus in any stoppage, but the bus keeps going. These are like an open-ended mutual fund. And then there are close-ended mutual fund, which comes with a close-ended bracket. This mutual fund is for 5 years. It will not allow you to come in and come out. So you basically only buy the mutual fund when it is issued at 10 rupees and it's for a particular purpose. Say some close-ended funds say that, okay, this is a 5-year investment where you are investing in only a balanced fund of debt and equity. So if you invest for the next 5 years, we will manage the fund the way we wish, and after 5 years, we will try to create best returns for you. Sometimes close-ended mutual funds also come with guaranteed returns on a sort of assured returns. It says that, okay, you invest and we will only invest in a bond which matures after 3 years or after 5 years. So you know that, okay, this is a close-ended fund, I'm buying at 10 rupees NAV, and I'm more or less sure that I will get 13 rupees after 3 years or after 4 years. And so close-ended mutual funds are primarily for people with proper purposes, with a close-ended nature of their investment, whereas open-ended funds are like different bus routes. You can get into the fund anytime and you can come out of the fund at any point in time. So these are the type of funds. Now, there are another type of mutual funds as to where the fund will invest their money. So it can be an open-ended fund, but the underlying fund can be invested in debt or bonds. Similarly, then it is called an open-ended debt fund or an open-ended bond fund. Similarly, the underlying fund can be share market. So it will be called an open-ended equity fund, which invests in equity market. Then there are certain funds which may say, okay, underlying pharma sector fund. So the name of the fund can be open-ended pharma fund. So as you know, after COVID, there will be so many pharmaceutical company into healthcare. They are going into a very different direction. And sometimes, we would like to take advantage of the valuation because if the pharma companies are doing well, that means your healthcare costs are going up. So to save, to combat that increased healthcare cost, a very smart thing is to invest in pharma stocks. So if healthcare costs go up, your share prices will also go up. So on one side, you will make more money, and yes, your metal cost will go up. So this is a combat strategy, as we say. So there are several mutual funds types. These are called type of mutual funds. So there are equity funds, debt funds, sectoral funds, government security funds. So there are certain funds you will be surprised to know that you can just choose a government security fund and you can put your money and say, I only want to invest in central government securities or central government bonds. So they are the safest type of mutual funds, and they give you very good returns. So people generally put their money in bank FDs because they want to be safe with their money. In mutual funds also, there's a category called government security mutual fund, which are as safe, sometimes safer than banks. So when you invest in a mutual fund, as I previously have said, that it's a pool of funds, but funds have different objectives. So if a client knows his objective, then he can choose the right fund, and then he becomes a very, very satisfied investor. In India, what happens is, we generally invest in the fund that my friend has invested and made money. And that is not the right way of choosing mutual funds. And that is where most of the accidents will happen. Your friend may have a different investment objective than yours. It is always good it is like medicine. Just because your friend comes and says, I've taken this medicine and I've been cured, and you also start taking that medicine, obviously you don't do that. So similarly, you need to meet a financial planner or a banker who needs to understand your need, what is your child's age, when you would like to retire, and the funds needs to be chosen because basis your need and not your elder brother's need or your dad's need or your friend's need.
Okay, this was really very informative because like this is the common mistake which majority of people are doing it. They are investing in the same kind of mutual fund which somebody's friend or family member is already doing it. It is really
Yeah.
important to discuss with your wealth management person because everybody has got a different kind of needs. Okay, well, Mrs. Soboji, just tell us one thing. What is the difference between this hybrid scheme and guild fund, index fund? What exactly are these ones?
So these are all different types of funds, as I have mentioned. So I think at the face of it, mutual fund, hybrid mutual fund means a combination of hybrid. So it has both debt or equity. Sometimes they can have gold as an allocation. So they are not, plain simple mutual funds like pure equity funds or debt funds. Similarly, when you have gilt fund, that means they are government securities. Similarly, there are several index funds. Like you keep hearing BSE Sensex has gone up or Nifty अभी इतना में चल रहा है. So there are even funds where you can just invest in Nifty and whatever Nifty goes, your fund will go up or go down accordingly. So this is how different types of mutual funds are there. Just like a medicine company has different kinds of medicines. All medicines are good. All just like all mutual funds are also good. You need to be choosing the fund or that medicine that your body needs or your financial situation needs, and then only you can be a very happy investor. There is no other way. Just do not choose mutual funds without the advice of the right doctor. Otherwise, you will have the wrong medicines.
Okay. Can NRI invest in mutual fund schemes?
Yes, NRIs can invest in mutual fund scheme. They can even bring in the money and through the repatriable route, they can invest in India and then repatriate the money back to their country of residence.
Okay. Is there any difference between investing in mutual fund and in an initial public offering that is called IPO of a company?
Yeah, so when a company issues shares for the first time, or then they are called IPOs, initial public offer. So mutual funds also sometimes are launched, like say for example, a mutual fund would like to launch a new scheme saying, COVID scheme, say, this scheme was not there in India, but a mutual fund would like to introduce a scheme called a COVID benefit scheme. So anybody and everybody who has got benefited by this lockdown and COVID, maybe in this COVID, as you all know, what has happened. Some companies like Netflix has benefited, Zoom has benefited. So a client may want to invest his money into those schemes which have got benefited by COVID, like the pharmaceutical sector, the technology sector, the telecom sector. They have been benefited by COVID. So for that, a mutual fund has to do an initial public offer or a new fund offering of a new scheme, and then that scheme will be available at 10 rupees, and then you can invest in the scheme, and then the scheme will become an open-ended scheme. Then if you don't invest at 10 rupees, you can always see the performance of the scheme after 1 year. You can see that, okay, now the NAV is available at 11 rupees. Then you might want to board the bus, or you may say that, no, COVID scheme is not for me. My advisor has said you buy a open-ended equity fund. So, that is how an open-ended fund and a new fund, when it comes to the market, is differentiated.
Okay. How can investor address their complaints?
Yes, I'm so glad. I'm so glad you asked all the relevant question, but I think this is the most important question because at the end of the day, the investors are investing their hard-earned money. So So, as I must tell you that mutual funds in India are very, very well regulated by the Security and Exchange Board of India or SEBI. And mutual fund industry started way back in 1964 with Unit Trust of India as the first mutual fund house of India. And then in 80s, the banks were allowed to come up with mutual funds. So SBI mutual fund is as old as 1987. Then the private sector came in the 90s. So there are certain fund houses like Franklin Templeton, like Merrill Lynch, like ICICI Prudential. They all came in the 90s. And today at 2020, I can tell you all these mutual funds now have track record of giving excellent performance over the last 20, 25, 30 years. And most of the clients, most, I can say 95% or more clients are very, very happy investors if only they have chosen their products carefully or as per their need. But under any circumstance, if a client has a complaint with a mutual fund investment, they can put that complaint to SEBI. They can put that complaint to the complaint register of a mutual fund. They can put that complaint to the trustees of the mutual fund. So when a mutual fund house, say for example, HDFC mutual fund, there's a team which is managing the fund that's called the fund team. But then there is a team called trustees, and trustees are not shareholders of the mutual fund. They have to be appointed by people who have a credibility but have no shareholding with the fund house. So these trustees are there to oversee the compliance of the fund. So you can write to the team who is managing the fund. You can even write to the trustees who are supposed to provide the trust cover of the investment. If you are not satisfied, you can go right up to SEBI to complain, to put your complaint, and the complaint redressal of mutual funds. You can Google it. It is one of the best sectors in the country. You would be surprised to know that you would seldom find unhappy set of mutual fund investors, because these are very, very transparent schemes. They are very open-ended kind of schemes. Everything about the scheme is available online, and literally I can tell you that over the last 25 years, this mutual fund as an industry has set up a very, very compliant structure, something that India and Indians can be really proud of. Mutual funds are very, very popular in US. Almost 60% of domestic savings. So if an US person invests 100 rupees of his money, in general, more than 50% of that money finds its way into mutual funds. But in India, for some reason, we about 5 to 10% of Indians save their money in mutual funds. But I think we are going towards that 50% as most developed markets, most developed countries have acquired mutual funds as their go-to investment vehicle. And soon in India, I'm sure Indians will also benefit from the mutual fund schemes and their performances.
Well, thank you so much, Mr. Somojit, for giving your valuable time to Living Healthy 24 and clearing all our doubts. Thank you so much for your valuable time. Thank you. Thank
Thank you very much. I'm very grateful to you, Living Healthy, and you, especially, you ask so much relevant questions. It is a very good initiative, and I'm feeling very happy that I've been able to contribute in my own little way to help people believe and more invest their hard-earned money in mutual funds. It was a very, 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 very rewarding, mentally very rewarding session for me. I'm very grateful to the team. Thank you.
Thank you so much, Mr. Somojit, again for sharing your wisdom and knowledge, for helping others and contributing to the society. Well, this is Prashanjit, author, motivational speaker, and business boompreneur, signing off. Stay tuned to Living Healthy 24.